The fastest and easiest way into becoming a consistently profitable trader is to treat trading like a business. My personal turning point was when I started treating trading like a business instead of a side hustle. Today I'm gonna go in depth on a topic that not a lot of traders shed light upon. Whether you want to admit it or not, trading should be treated as a business. The top traders don't treat it like a side hustle or a hobby, and neither should you. Growth comes from analyzing the statistics and making decisions based on those analytics. In this video, I'm gonna show you my step-by-step process on how I personally treat trading like a business and how you can implement it as well. Let's start it up! Now, before you start any business, you want to have a plan that will steer you in the right direction and keep you afloat. This is what is called a business plan. I know. A business plan is extremely important, especially in the trading industry. This will set you apart from 99% of other traders. 99% of other traders are not treating trading like a business, and they're treating it like a side hustle or a hobby. Meanwhile, the 1%, they're truly treating it like a business and following a proper business plan. Now, every business should have a plan on how they're gonna succeed. If you don't have that, you're walking into the industry blind. Every marketing company out there has targets that they wanna hit by the end of the month. How will they get there? They're not just gonna sit around all day magically hoping to achieve it. That's not how it works. They have leads that they've acquired to help them achieve these targets. If it's sales, for example, are you getting into low ticket sales or high ticket sales? If it's low ticket, then you'll need to hit a certain amount of sales to hit your monthly quota. But if it's high ticket, for example, then you need a less amount of sales to hit that same quota, but you might need to work a little bit harder to achieve those sales. Knowing which one works best for you is where you should go towards, because that's where you'll likely make the most money. This is exactly the same as trading. Your quota should be how much you expect to gain per week or per month. Now, I don't personally think it's healthy to have a daily quota, because there will be days in the market that are deemed low probability and just give you no setups. And trading those days where it's lower probability and the odds aren't in your favor isn't sustainable in the long run. I would personally say you should have a weekly quota and a monthly quota so you can track your week over week and then your month over month progress over time. Now, how would we truly formulate a good trading plan? Man, that's easy. Firstly, you're gonna ask yourself which asset class you're gonna trade. There are traders out there that trade every single asset and commodity known to man. One day they're trading Bitcoin, and then the next day they're trading orange juice futures. Do not be one of these traders. This isn't a good indication of a good business plan. A proper plan consists of rules that need to be abided by. A true businessman isn't going up and starting a new business in every single industry. He or she, it's 2024, is focusing on one single industry and scaling that as high as they possibly can. This is the same with trading. Just because the technical analysis is relatively similar doesn't mean you should be trading every single instrument known to man. Focus on a set group of instruments and master them, because you only need one or two instruments to truly be profitable in this game. Now, what kind of style will you be trading? This question is to determine whether you're a scalper, day trader, swing trader, or a long-term investor. Different strategies and different amounts of capital require different styles. If you have larger capital and you're trading with millions of dollars, then you're likely not going to be a scalper unless you're trading with extremely small size. Why do I say this? Because with that amount of capital, liquidity will be an issue for you. If you're trying to trade with large size, getting in and out of your positions is extremely crucial, and that will be extremely hard for you because there's not going to be enough liquidity for you to fill your entire position. No trader is putting $10 million onto a trade and scalping 2 cents. He or she, like I said, it's 2024, won't be able to get out of their full position when they want to with that amount of size. Liquidity is extremely important. Now, if you're trading with smaller size, getting in and out of a position with a few hundred or even a few thousand is extremely easy. Now, don't get it twisted. The style you choose isn't completely determined by how much capital that you have, but instead, it's also determined by your personality as a trader. So if you're a swing trader by heart, you're likely gonna gravitate towards swing trading. You're not gonna go out of your way to become a scalper. Find what your personality in trading is and what your goals are. Collect this information and come to a conclusion on which style you will personally trade. What does your schedule consist of? Having a schedule is extremely important when it comes to operating trading like a business. Like every boss in a company, they expect their employees to arrive at a certain time and do a certain amount of work and leave at a certain time. The only issue with this is that with trading, you don't have a boss. You are your own boss, which is an extremely good thing, but also a bad thing. You are the only person that can keep yourself accountable. Having a schedule every single day keeps your life outside of trading in check. And when you have a functional life off the charts, you'll be able to perform at your best ability on the charts. The last thing you would want to do is to hinder your trading performance, and the best way to prevent that is to have a routine. Having a routine also helps with discipline, which is extremely important in trading. If you aren't disciplined, you just won't be profitable. Simple as that. Every morning you should be waking up at the same exact time. If you have to do pre-market analysis, you should be doing that every single morning. When you have a set routine that you follow, trading will get 10 times easier. Because if you have a routine that you follow outside of the charts, you are more likely to follow your rules inside of the charts. When you are able to follow your rules and trade at the best capability that you possibly can, you give yourself the highest probability to succeed in trading. Because at the end of the day, trading is just a game of probabilities. So positioning yourself in the highest probability scenario, even if it's outside of the charts, is extremely important when it comes to treating this like a business. Mindset. Your mindset is one of the most important things when it comes to trading. If you're not 100% there mentally, your trading will reflect that in a negative way. Many people neglect this and focus purely on the charts because that's all they see on social media, but this should not be the case. The reason trading is extremely hard is not because of the charts. It's because of the emotions that are attached to the money. Every single trader has experienced this because we're all human. Except for like the algos trading, but you know what I mean, alright? Focus on your mindset and you'll be doing what 99% of other traders aren't doing, and that's how you will be one step closer into treating trading like a real business. What is your game plan or setup? For yourself to be in the highest probability scenario to win, you need to know what that scenario looks like on the charts. If you do not have a setup that has been back tested or forward tested, how will you know what your highest probability scenario is? You'd be guessing at that point, and do you think the top 1% of traders that treat trading like a business guess on their highest probability scenarios? Hell no. So neither should you. For you to have the highest chance to succeed in trading, you need to know what your best setups are. Are they reversals? Are they continuation trades? Are they range trading? Find what you do best and systemize it. Look at the data that you've collected and form conclusions depending on that, not depending on your feelings if you think it's gonna go up or down. That's not a viable system that will keep you profitable over a long period of time. Sure, it can make you some money today, but it'll likely not keep you profitable 5 years from now. Every single large business does multiple tests and collects data before they make a dramatic change in their business model. If you're planning on switching setups, you should know how much better your new setup is compared to your old one before doing so. Find out how much the win rate increases, how much the risk reward increases, how it performs during different market conditions. Find out when you trade the best. If Mondays you are extremely unprofitable historically, you should likely not be putting a lot of size on those days. But if Thursdays are your best days, then you should be putting on more size on those days because statistically, probabilities on Thursdays are in your favor. Find out how much your win rate increases and your risk reward increases week over week and month over month. If trend days are your best days, you should be sizing up on those days and holding trades longer. All this comes from the data that you collect on your setup, and this can only happen if you have a game plan or setup to begin with. The best traders approach trading this exact way. So if you're not doing this, you're putting yourself at a disadvantage. How will you scale up? With every single business, when they're testing a new product, they don't mass produce it instantly. They produce it for a small group of people and find their reactions to the product. This is called a sample group. If the reaction is good, they scale it to larger sample groups, and if it's still good, they scale it to the entire world. But how does this correlate with trading? When you have a new setup that you want to trade, you should not be putting balls to the wall risk on the table instantly. You should be sized extremely low to see how you see the setup in real time and also how you manage the trade. Only when you've perfected these aspects should you be scaling up and putting balls to the wall risk on the table. Now, you likely don't want to be risking the same amount per trade for the rest of your entire life. That means you're not growing as a trader. If you're risking $500 per trade, you'd likely want to eventually start scaling up to $1,000 per trade and scaling even higher than that. How will you do this though? There's a method on going about this. When you are confident in your setup and have built a large enough cushion to scale up in, Then and only then should you be scaling up on a trade. You should not be looking to scale up on a trade if you are in drawdown or haven't built a large enough cushion to withstand that risk. Those should be the times where you scale down on your trades because probabilities aren't in your favor, and doing this is how you keep your account for a long period of time, because the name of this game is to keep your account for as long as possible, not to make money. We are risk managers first. The money is a byproduct of being amazing risk managers. Now, let's say you are up 10K on an account and you're still risking $500 per trade. You will need 20 trades to get back to break even. You could start to increase your risk only on high probability setups. These are not setups that you take every single day. A high probability setup comes maybe a couple times a week or a month, depending on how your strategy is. The best thing about trading is that you don't have to put in more work to make more money. All you have to do is increase your position size and have the mental fortitude to withstand that risk that you're putting in on the trade. That, and also having a cushion on your account. When you have these things, increasing your risk and scaling up will become a much easier process. Scaling up is also extremely important during periods of high probability and scaling down during periods of low probability. This one trick will result you in making large amounts of money in high probability market conditions and have you lose barely anything during low probability conditions. You should know when to scale up and when to scale down, as this will keep you in the game for as long as possible. If you master this and risk management, it will be extremely hard for you to blow up an account, and this is how you will be treating trading like a real business. Now, with all these ideas, you probably have a very good understanding on how you can transform your trading from a side hustle or a hobby into a real business. But it won't mean anything if you don't implement it and use it correctly, because information without action is absolutely useless. If you continue to treat it like a hobby, that's all it'll be.